How is everybody doing today? Welcome back to another episode of The Banker Next Door. I'm your host, Dr. Joe Berquist. Today, we're going to be taking a look at Cornerstone Advisors, the annual report that they put out called What's Going On in Banking 2025. This is the 10th anniversary of this report. I look forward to this every year. It's one of the probably more favorite reports that I have on my list that I love to look at. And for anybody know, Cornerstone Advisors, they're basically a financial advisory firm located out in Arizona. I believe Scottsdale. I'm not sure. Maybe Phoenix, but I think it's Scottsdale. I think they're located out in Scottsdale, Arizona. But absolutely fantastic team out there. They're known all throughout the banking industry. Steve Williams is CEO over there. Al Dominic, one of the partners, and then Ron Shevlin, who's their chief of research. Fantastic guys. I've known them for many years. They do an absolutely incredible job helping hundreds, if not probably thousands of banks all over the country. And, one of the key things they do is they do a lot of research. They do a lot of research on, what's going on in banking, really try to stay ahead of the curve in terms of technology and what's going on. And thus the report here, what's going on in banking 2025. And this is titled Happier Days Ahead. So, and I do want to make this probably a little bit bigger so that we could see what's going on here. So yeah, there we go. Okay. So let's just take a look at the table of contents. I got to keep this a little shorter because we got to try to keep this to a 10-minute or so video. We could be here for 45 minutes going through all this because there's a lot to digest in here. But this basically says, trouble ahead, trouble behind. They ran a survey on a lot of bankers and what did the survey results come back with? They talk about the 2025 outlook. Dawn is breaking everywhere. CFPB, a searchlight casting for faults in the clouds of delusion. And they talk a lot about the Rule 1033, which is the open banking rule. The law come to get you if you don't walk right. When life looks like Easy Street, there is danger at your door. There's stiff competition all over the world. Deposits, like the good book says, you got to reap just what you sow. And then they get into AI. I opened my robot up and got to work. Data elements in AI, the next phase in AI agents, AI shortcomings. You're slowly making me pay for things. Might as well jump on the buy now, pay later bandwagon. Nothing is borrowed, nothing is lent, really getting to lending activity. I'm right, Jack. Keep your hands off my tech stack. New selections, replacements, introducing the deployed to planned DTP ratio. Fintech partnerships, so happy together. Fintech investments, banking as a service, the BaaS model. Core providers, isn't it ironic? And then it kind of wraps up with basically looking ahead. We will get by, we will survive, but come on, baby, squeeze me tight. We're talking about net interest margins. The new small business will save community banks, and say your piece and get out. And then it just ends up with about the author, about Cornerstone Advisor, end notes, that kind of thing. So. But it starts in here, trouble ahead, trouble behind, and that notion just crossed my mind. Welcome to the 10th edition of Cornerstone Advisors. What's going on in banking study? In 2023, headwinds and tailwinds blew financial institutions into a windless cove where they rode out the storms brewing in the middle of the sea. In 2024, smarter banks and credit unions went searching for the next wave to ride towards a new future and destination. So what will 2025 look like? Let's see here. Let's skip down to, and the survey says, so and it talks about, just the number of banks that were surveyed. So with roughly 3,100 banks and credit unions in this asset range, it talks about the margin of error. They talk about it had an acceptable margin. They believe the sample is representative of banks that are forward-thinking about technology, aggressive about growth and market share, and unafraid to take on the mega banks, startup fintechs, and others competing with them for mind and market share. Rising up to paradise. I know I'm going to shine. The purpose of this report is to help both financial institutions and the technology companies and the technology companies that serve and partner with them better understand what's going on in the industry, plan for the changes, and deal with the challenges. And there are plenty of challenges. Ultimately, I'm optimistic, as are the rest of my colleagues at Cornerstone Advisors, about the prospects for community bank financial institutions. We see the good you do for communities. We know you're going to shine. Last thing before we get into the heart of the report, the title of the report was inspired by the Marvin Gaye classic, What's Going On? And like last year's report, this year's report includes many subtle and not so subtle musical references. There's already been 3 Grateful Dead related references. Hope you find them all. So they are playful over there at Cornerstone Advisors, that's for sure. Okay, here. So what do people think about 2025? What's the outlook? So 71% are somewhat optimistic. 14% somewhat pessimistic, 3% not sure, and 12% are very optimistic. So it would seem the vast majority are somewhat optimistic about the year. I think I tend to be in that somewhat optimistic camp as well. I'm hoping. I do see some headwinds in front of us, but hopefully we will come through the year okay. At a financial institution's executive outlook for 2023 to 2025. So very optimistic. You can see that has increased 7%, went down to 5, back up to 12. Somewhat optimistic, 47, 55, 71. So definitely trending in the right direction. Somewhat pessimistic, has really declined, 41% to 37 to 14. Very pessimistic is literally 0. And then not sure still remains around 3%. Type of institutions, banks and credit unions. So in the very optimistic crowd, we have banks at 17 and credit unions at 6. Somewhat optimistic, banks at 69 and credit unions at 74. Somewhat pessimistic, banks at 11%, credit unions at 19. Very pessimistic, both are at 0. And then not sure, banks are at 4. Credit unions at 2. So it's just It's just interesting to see that for credit unions, again, you got basically 80% are somewhat optimistic to very optimistic, but then you still have 19% is still somewhat pessimistic. That's kind of interesting. Banks, again, vast majority there, still looking at what do we got? About 86%, still looking either very optimistic or somewhat optimistic. Think, which is very good there. Then we get into kind of the economy, industry dynamics, regulatory dynamics, the CFPB, and then now we're getting into the bank, the open banking rule 1033. What will the impact of 1033 be? So 27% not sure. 21% a benefit to both consumers and financial institutions. I'd like to know who thinks that. Who wrote that one? 21% benefit to consumers, but not financial institutions. Very good there. Won't be a benefit to either consumers or financial institutions, 32%. I am in that 32% category for me, for one. If anybody hasn't checked out my episode on open banking, go check that out. I will have a lot more to say in coverage of open banking as we go on throughout the year. But I'm in this camp. I'm in the 32%. I do not believe it's a benefit for consumers or financial institutions as it currently stands. Now, if they make a lot of changes to it, make a lot of improvements to it, maybe. As it stands right now, I'm a hard no. No, just don't want it. So, and then they go on here and they basically say, what is it? Data accessibility, third-party obligations, standardization and interoperability, consumer rights. But then it gets down to here. It's just kind of interesting. The Rule 1033 will fall short of its goal, and what needs to be done about it if consumers lack education? Yes, there's a proliferation of data and providers. Consumers are vulnerable to data privacy risks. Yeah, absolutely. And the industry is unable to address data breaches. Therein lies your big issue with this. You're relying on an API technology that can be hacked. It can be hacked and it will be hacked. And the more people you allow to have access to the bank's data and ultimately the consumer's data, you're going to have problems. You're going to have massive hacks. These are not going to be small hacks when they happen. They're going to be massive, as in all the bank's data is going to be gone and out there on the street. Wait till let that happen once or twice and see how consumers feel about this thing. There are going to be a lot of people looking for some people's butts at that point. And then the unintended consequences of open banking. It goes into that. We could, like I said, we could get into more of that. I wanted to skim down here. Bank execs' top concerns. Again, deposit gathering, efficiency, non-interest expense and costs, cost of funds, cybersecurity. Pretty much the usual stuff. Obviously, 24 now going into 25, deposit gathering has really become a big issue on the list. Let's see if we continue to scroll down here. Stiff competition out there, threats to banking. We have big tech, mega banks, big fintech, challenger banks, U.S. government, banks' deposit priorities, retail deposits, small business deposits, large commercial deposits, credit union deposit priorities. If I can skip back to that, deposit strategies, deposit strategy effectiveness. AI, I opened my robot up and got to work. So banks' deployment of artificial intelligence. This is kind of interesting. So mainly chatbots, a lot of machine learning, and then, generative AI, not so much. It's, kind of a nice jump there from 6% to 16%, but still, not, I think this myth that like every bank out there is dabbling in AI is just not, it's not so. And I think the trouble with chatbots is that, you've got very mixed reviews on the effectiveness thus far of chatbots. Machine learning is probably the most interesting aspect of this so far, because you got to have machine. The AI is built upon the machine learning. So, and then banks' AI status. Robotic process automation, chatbots, conversational AI, machine learning, generative AI. So I think good trends and things to look at. Credit unions' deployment of artificial intelligence. Credit unions' AI status, banks' generative AI plans, credit unions' generative AI plans, banks and credit unions' data assessment. The next phase in AI, agents. So what is an agent? The problem with the term agent is that it evokes the image of a call center agent or representative. In a generative AI context, that's the wrong connotation. I like the definition from a white paper from PwC, AI systems that possess the capacity to make autonomous decisions and take actions to achieve specific goals with limited or no direct human intervention. AI agents have certain traits or capabilities. They're autonomous, goal-oriented, workflow-oriented. How AI agents work: user provides instruction to agent plans, allocates, and executes work. Agent iteratively improves output. So, okay, interesting thing. AI agents in action in banks. AI's shortcomings. I really like the fact that they give kind of both sides of the equation here. They don't just basically give you the oh, hey, here's the good rosy conversation here. They try to give you both points, which I think is great. AI isn't ready for prime time in financial advice. You're slowly making me pay for things. Real-time payment status. They really do a great job in this report of really covering a lot of ground with a lot of stuff. And like we're not even. And they talk about buy now, pay later. Nothing borrowed is nothing lent. Basically, banks' lending priorities for 2025. C&I loans are big on the list. Real estate loans are big on the list, as as they always tend to be. Credit unions' lending priorities. And let's see, keep going down here. Banks' tech spending changes, which is kind of interesting. Significantly higher, somewhat higher, no change. Basically, a lot of banks somewhat higher, 64% in 2025. So it's interesting. It's good to know. Technology challenges. Let's see here. Let's keep rolling down. Banks deployed to planned ratio. And then fintech partnerships, so happy together. Definitely probably some good information in there on fintech partnerships. fintech partnership offerings, credit union fintech partnership offerings, banks investment activity and fintech startups. And then we get down to banking as a service, and then core providers, a little information on core providers there. So again, a lot of, and I'll kind of wrap it up with that. But basically, yeah, I mean, just a tremendous report. I do have a link to the report down in the description below if you'd like to go check it out. If you'd like to go to Cornerstone's website, you could download the report for free. But like I said, this is a fantastic report. Absolutely a huge fan of Cornerstone. I love the work that they do over there. Great group of guys. If you know, maybe if your bank's not familiar with them, definitely go and check them out. You can find them on LinkedIn. You know, Ron and Steve Williams, you know, post and well, and Al too. They all post a lot of great information and content on LinkedIn. So, you know, go over, give them a follow, check it out. But I highly recommend you check out this, what's going on in banking. A lot of great data in this report. I mean, we, you know, did about 15 minutes here and I only really scratched kind of the surface here. But like I said, go check this out when you have a minute. I think there's a lot of great tidbits in that report, a lot of great things to find out. But I'll wrap up by saying, if you like this episode, please make sure to like, share, and subscribe, as that always helps the channel. Remember, we are on YouTube, Rumble, and all major podcast platforms. Please be sure to leave your comments down below, as I always love getting back to everybody. And as always, make sure to check out some of the other content on the channel. Have a great day out there, and I will see everybody again real soon. Thanks a lot.